In the wake of widespread outrage and protests about racial injustice, many are calling on corporations to help end racism in their workplace and in their communities. If you're an investor of any type, whether you have a 401k, an IRA, or a trading account, you might be looking at your stock portfolio and wondering, what can I do to support racial justice with my dollars? You may have heard of ESG investing, which stands for environmental, social, and governance. It is also often called sustainable, socially responsible, or simply values investing. There are many ways to use money for the benefit of society. So first, let's clarify what ESG investing is not. It's not charitable giving, like donating time or money. And it's not consumer spending, like when people support Black-owned businesses by buying their services or products. It's an investment strategy that selects stocks and bonds based on not only financial criteria, but also their impact on society and the environment. Proponents of ESG investing point to a growing body of evidence that suggests that sustainable investing may actually improve a portfolio's performance while also serving the greater good. Environmental factors often include things like carbon emissions and water usage. Social impact may involve working conditions for a company's employees and gender or racial equity. And governance criteria often have to do with board oversight and transparency. In light of recent events, the S, or social part of ESG, has come into focus as more and more people are focusing on the social impact of large corporations, specifically from a racial justice standpoint. That's where things get a little tricky, because even though there are dozens of funds marketed as ESG, there's not an official definition of socially responsible investing. To further complicate the issue, there are dozens of different companies that issue ESG ratings, ranging from large data providers like MSCI and Sustainalytics to smaller companies and even nonprofits that focus on topics like gender pay equity or civil liberties. Unlike accounting standards, there's not one unique methodology. Some of the data is self-reported by the companies, and some is done by third parties, which are often estimating. And while there are at least some data measurements on the environmental part of ESG, like carbon emissions, when it comes to social impact, the industry has struggled to find meaningful and widely accepted measurements. There are some broad principles, like how the company treats its workers and how it helps protect human rights in its communities, but these are often hard to quantify. For example, companies can get a high score for having anti-harassment policies in place, without actually tracking how well those policies are actually implemented. In the wake of recent events, that could change. For instance, Calvert Research and Management, a prominent sustainable investing shop, called for companies to accurately assess their racial diversity and make it public, provide pay equity disclosure across race and gender, and publicly state what they're doing to combat racism and police brutality. Similarly, OpenInvest, a company that builds indexes and other investing tools around social causes, has created an index specifically on racial justice. That screens for metrics like board member inclusion, workforce diversity, and which companies pollute the most in communities of color. And Impact Shares, a nonprofit provider of exchange-traded funds, has launched a first-of-its-kind racial empowerment ETF backed by the NAACP. Here's some good news. The popularity of socially responsible investing has exploded in recent years. In early 2020, around 74% of global investors said they plan to increase their ESG allocation over the next year. And even as markets tumbled due to the coronavirus crisis, global demand for ESG proved resilient. In the first quarter of 2020, the global sustainable fund universe saw inflows of over $45 billion, while the overall fund universe saw outflows of more than $380 billion. Some experts say that growing investor demand will force the industry to innovate and offer more transparency around the measurements of social impact, especially as it relates to racial justice. In the meantime, you can build your own socially responsible portfolio by looking at the different ratings and methodologies and picking what aligns best with your values and financial goals.